Okay, within the reference guide to regulatory compliance, I'm reading on page 449 regarding the Electronic Fund Transfers Act within subsection 2, deposits. Reg E, the Electronic Fund Transfers Act, was enacted in 1978 for two primary purposes. One, to provide disclosures to consumers who use electronic fund transfer EFT systems, and two, to provide consumers with limitations on liability for unauthorized electronic fund transfers. Implemented by Reg E, electronic fund transfers, EFTA is intended to provide certain rights to individual consumers using EFT payment systems. It also replaces responsibilities on financial institutions whose accounts are affected by EFTs. In response to a concern that national banks might be rejecting claims that EFTs were unauthorized solely because the customer's ATM card or personal identification number was used, in response to this, the Office of the Comptroller of the Currency, OCC, issued an advisory letter in 2001 that describes a reasonable investigation of an unauthorized transaction. In 2005, the Federal Reserve published an interim final rule effective July 1, 2007, bringing payroll card accounts under the coverage of Reg E. In 2005, and again in 2006, the Federal Reserve amended Reg E to clarify its coverage regarding electronic check conversions and fees for return checks and EFTs collected electronically. In 2009, the Federal Reserve amended the regulation to add restrictions on charging overdraft fees on ATM and one-time debit transactions. The rule, effective in 2010, required disclosures and affirmative opt-in consent before such charges could be levied. In 2011, the authority for Reg E was transferred to the Consumer Financial Protection Bureau. The CFPB published the regulation under its new citation convention, Chapter 12 of the Code of Federal Regulations, Chapter 1005. In January of 2012, the CFPB published a final rule revising Regulation E to require disclosures and the right to rescind money transactions. Coverage. All institutions with consumer accounts that can be accessed by EFT devices or that provide EFT services to consumers are covered under Reg E. EFTs are 1. Any transfer of funds that instructs a financial institution to debit or credit an account other than that originated by check, draft, or paper instrument. 2. Transfer generally must be initiated through an electronic terminal, telephone, computer, or magnetic tape. 3. Account access must be a consumer's asset account, not a credit account, established for primarily for personal, family, or household purposes. Can also be a payroll account established by an employer on behalf of a consumer. 4th, including the following types of fund transfers: A. Point-of-sale transfers. B. Automated teller machine transfers. C. Transfers initiated by telephone. D. Direct deposits. Let's see. E. Withdrawal of funds, including merchant transactions where no electronic terminal is involved, if the customer's account is debited. F. Payments made by a bill payer under a bill payment service available to the consumer via telephone or computer unless the bill payment agreement explicitly states that payments will be made solely by check or other paper instrument and the payees that are paid in that manner are identified to the consumer. G. Payments authorized by a consumer and initiated by using the consumer's check as a source of the information for a one-time electronic transfer from the consumer's account. The check is not, however, considered an access device. H. The electronic payment of a returned item fee. 5. EFT does not include electronic check representment when a check is returned. Pre-authorized EFTs are also covered by Reg E. A pre-authorized EFT is a transfer that is authorized in advance to occur at substantially regular intervals. Payments that require the customer to take specific actions to initiate them, such as by entering instructions on a touch-tone telephone or on the internet, are not pre-authorized EFTs. The exemptions to Reg E include 1. Check guarantee services that do not result in a debit or credit to a consumer's account. 2. Wire transfers between banks or businesses sent through FedWire or a similar wire transfer system. 3. Transfers to purchase or sell securities regulated by the Securities and Exchange Commission or the Commodity Future Trading Commission, sold or purchased through the SEC or CFTC dealer or held in book entry form by a Federal Reserve Bank. 4th exemption from Reg E are transfers under an agreement with a consumer to transfer funds between accounts of the consumer, between the consumer and other members of his or her family, from the institution to the consumer, or from the consumer to an account of the institution. The transfers must be between accounts at the same institution. This section covers such transactions as the automatic crediting of interest to a savings account and the transfer of a loan payment from a checking account. In such transactions, the institution remains subject to the sections of the EFTA that provide for civil and criminal liability. 5th exemption from EFTA is telephone transfers that are not recurring, are initiated by a telephone communication between the consumer and a financial institution, and do not take place under a telephone bill payment or other written plan. 6. Trust accounts under a bona fide trust agreement are excluded from EFTA. 7. Pre-authorized transfers at institutions with $100 million or less in assets on the preceding December 31st. If the institution's assets exceed $100 million, it must begin compliance with the EFTA 1 calendar year later. 8. Any transfer of funds originated by check, draft, or similar paper instrument, including the electronic representment of checks, although one-time ACH debits initiated by check transactions, are covered. The requirements under the Electronic Fund Transfers Act. Disclosure requirements include A through H. A, must be in clear and readily understandable written form. B, if used, abbreviations must be commonly accepted or readily understandable. C, must be in a form a consumer can keep. D, if multiple consumers may provide only one set of disclosures, only one set of disclosures are required. E, may be combined with other disclosures required by law. F, if multiple accounts may combine all required disclosures. G, may be provided in a language other than English, provided it also is available in English on request. And H, a financial institution that uses electronic communication to provide written disclosures must comply with the electronic signatures in Global and National Commerce Act, e-Sign Act, including the consumer consent provisions. Initial disclosure timing must be provided at the time a consumer contracts for an EFT service or before the first EFT is made. Content, the disclosure must include I, a summary of the consumer's liability for unauthorized transfers. 2, telephone, Roman numeral 2, telephone number and address of person or office to be notified in case of an unauthorized transfer. 3, the institution's business days. 4, the type of EFT the consumer may make and any limitation on EFTs. 5, EFT charges. 6, the summary of the consumer's right to receive documentation of receipts, periodic statements, and notices regarding pre-authorized transfers. 7, a summary of consumers' right to stop payment of pre-authorized EFTs and procedure for stop payments. 8, a summary of institutions' liability to consumer for failure to stop or make transactions. 9, information regarding when the institution may disclose information to third parties regarding the account. 10, a notice that a fee may be imposed by the ATM operator when the consumer initiates an ATM transaction, including a balance inquiry. And 11, error resolution notice. C, the requirements for initial disclosure on new services. If an EFT service is added to a consumer's account and is subject to the terms and conditions that are different from those described in the initial disclosures, a new disclosure must be made at the time the new service is added or before any EFT is made using the new service. Receipts at electronic terminals are also disclosure requirements. For timing, they must be made available at the time the EFT transfer is made at an electronic terminal. As far as content, A, the amount of the transfer and the charge for the transfer, if any, must be included in the receipt from the electronic terminal. The charge must also be displayed on or at the terminal. The date of the transfer, the type of transfer and type of account may use codes if they are explained elsewhere on the receipt. 4th, number or code identifying the consumer's account or the access device, it may be abbreviated. 5th, the location of the terminal may be a code or terminal number. And 6, the name of any third party to or from whom funds are transferred. Disclosures at ATMs. A, covers ATM operators that operate an ATM machine at which a consumer initiates an EFT or a balance inquiry that do not hold the account being accessed. B, ATM operators that impose a fee for EFTs or balance inquiries must post a notice that a fee may or will be imposed, and 2, disclose the amount of the fee on screen or on paper before the customer becomes obligated to pay for it. C, the posted notice that a fee may or will be imposed must be displayed on or at the ATM machine in a prominent and conspicuous location. Institutions may impose a fee under some but not all circumstances, may disclose on the sign that a fee may or will be imposed, or in the alternative, specify the types of EFTs for which a fee is imposed. And 2, if a fee will be imposed in all instances, the notice must state that a fee will be imposed. The customer must agree to pay the fee before it is assessed, and a fee may be imposed only if the notices are provided and the consumer agrees to continue with the transaction. Pre-authorized transfers requirements under EFT. A. That's pre-authorized transfers from a consumer's account must be authorized in writing, signed, or similarly authenticated by a consumer. Notices to consumer is required when a consumer's account is scheduled to be credited or debited by a pre-authorized transfer from the same payer at least once every 60 days. C, if a payer provides positive notice to a consumer, a notice is not required by the financial institution. For timing, pre-authorized transfers must provide within 2 business days after the transfer occurs or should have occurred, and the content of such pre-authorized transfer disclosure must provide either oral or written notice that the transfer has or has not occurred. F, as an alternative to a written or oral notification to the consumer, the institution may provide a readily available telephone number that the consumer may call to ascertain whether the transfer has occurred. The telephone number must be provided on the initial disclosure and on each periodic statement. G, must credit recurring pre-authorized transfers as of the day they are received. H, transfers that vary in amount must be communicated to the designated party payee within 10 days before the scheduled transfer, or may give the consumer the option of receiving notice only when a transfer falls outside a specified range of amounts. I, compulsory use of EFTs is prohibited in credit transactions except for credit extended in an overdraft credit plan or to keep an account at a specified minimum balance. Creditors may offer lower interest rates or fees for programs with automatic payment features, provided those programs are not the only loan products offered for that type of loan. And J, financial institution may not require consumer to establish an account for receipt of EFTs with a particular institution as a condition of employment or receipt of government benefits. The 6th requirement under EFT is the notice at the time of electronic check conversion. The person who initiates the check conversion must provide a notice to the consumer at the time of the conversion that the check may be processed as an EFT and obtain the consumer's authorization for the EFT. B, consumers are deemed to authorize a transaction when they receive a notice and go forward with the transaction. And C, for point-of-sale transactions, the notice must be posted in a prominent place and the consumer must receive a copy or substantially similar notice. D, the notice must also state that the funds may be debited from the consumer's account as soon as the same day the payment is received, and, if applicable, that the consumer's financial institution will not, and, if applicable, will not return the check to the consumer. E, if the consumer may have to pay a return item fee on the transaction, the notice must state this fact and the amount of the fee. If the fee may vary depending on factors, the notice may explain how the fee is calculated rather than the dollar amount of the fee. Return item fees are deemed to be authorized by the consumer when the notice is provided and the consumer goes forward with the transaction. The 7th requirement under EFT is point-of-sale transactions. If a return item fee may be charged in connection with a point-of-sale transaction, the person initiating the EFT to collect the fee must post a notice in a conspicuous location and provide a copy or substantial notice to the customer by mail, one of the customer's address as soon as practicable. The notice must state the dollar amount of the fee if the fee can be determined at the time of the notice, or if not, an explanation of how the fee will be determined. Periodic statements, change in terms notice, and error resolution notice will be discussed in Part 2 of Reg E.